Hey everybody, it's Mike from the HomeHappy podcast, and I'm here joined by Kalinka and Dallas, and we have a guest, Derek Funk. Welcome, Derek.
Thank you for having me.
Derek is an appraiser. He runs a great appraisal company up here in Kelowna, and we thought it was a really important topic to kind of cover what appraisers do, what makes it different than what you might expect from a realtor as far as values, and just generally just to learn more about it. So Derek, why don't we just let you do your thing? Tell us about what you do, and yeah, we'll go from there.
Yeah, thanks, Mike. So basically, when it comes to the appraisal side of the business, the value we provide in our reports is the fair market value, what your property would sell in today's market, not necessarily what you would really list your property at, but we take comparables, the most comparable properties to the subject property being appraised, and we analyze it from the differences and make adjustments on the differences from property to property. Typically, most appraisals are required for financing. I'd say probably 95% of our appraisal requests are for financing for mortgages, home line of credits, whatever it is. They don't tell us, but typically it's just mainly for financing. Usually it's for first mortgage financing, but lately in this market, I'd say a lot of our appraisals have been completed for second mortgage financing through private and MIC lenders. Market's kind of shifting in that direction quite a bit because I feel like a lot of homeowners are having a difficult time getting financing through your regular institution like a Scotiabank or a TD Bank. So they're looking elsewhere for alternative lending options. So we've noticed that more and more in this market with the rising interest rates for sure. People that bought in the peak of, the spring of 2022, which we all know the market spiked during the pandemic at that time. We noticed a lot of people got caught up in that multiple offer situation. After that point in time, the market really kind of stalled and interest rates started to rise. And I do feel like a bunch of homeowners did get caught up in that point in time there. But for the most part, if you bought before that pandemic, you really experienced quite an increase in your property value. So a lot of people, I keep hearing that everyone's tight with their mortgages. It's just if you bought in that certain time and maybe didn't lock in a rate or experienced a higher interest rate and you overpaid for your property, I could see those homeowners being in a bit of a tricky situation. But like I said, if you bought prior to that time, you're going to have quite a bit of equity in your home because prices did skyrocket quite a bit from 2019 up to that 2022 mark. So that's what we've noticed. And typically when it comes to the appraisal process, we send an appraiser through the house. They have to view the entire home. We ask the homeowner questions of any upgrades they've done. It's a full walk through the property. We aren't home inspectors. There's a big difference there. We don't, look into the attic if there's no access. So we look at as much as we can see from our eyes. And then basically that's where the difference comes into play when it comes from the appraisal process and home inspection. We make note of any deficiencies on the property that we see or what's brought to our attention, but mainly we focus on the comparables and the market value for that specific property.
Yeah, I'll just chime in there quickly. When we're involved with helping clients find financing, obviously rules are tighter than they used to be. Some people aren't qualifying income-wise to qualify for the amount of money they want to borrow. So then we end up dealing with private mortgages, which are much easier because they generally don't look at income nearly as much or credit. But what they do look at is your equity. And that's why the appraisal becomes so important in those scenarios. They're relying on that value that Derek and his team are going to come up with to figure out if they can lend you the money. And so it's a hugely important part of that process. And like you said, Derek, we're finding more and more deals like that right now to help people through this scenario and the tough times. So that is really, really relevant. But one thing it's interesting is people do think that you're doing an inspection or something. And it's funny what we hear back from people. And we've had Ian, the home inspector, in and did a podcast. Check that out down below. But there's real big differences. Maybe Dallas, do you want to comment on that and from your point of view? And
Well, I'm a little off topic. My brain's thinking somewhere else, but I think, how nervous are appraisers right now to get that number right?
That's a good question. I mean, typically out of 50 appraisals, if there's one going sideways, it just really stands out. Our spider senses wake up, and we've just appraised thousands of homes, and we know what we're doing. We're all experienced in all of our areas that we appraise in, from Alberta, our team in Alberta, our team down in Vancouver, our team up here. So it's just very important to have an experienced appraisal team that knows what they're doing, that knows where the market's going. And I mean, the most difficult part about our job recently, over the last couple of years, are just finding enough sales to support the value, because there just aren't a lot of sales. And Dallas, you can probably agree with that. That, you know, during the recent market trends, there hasn't been a ton of transactions like we experienced during the pandemic. So a lot of our lender, they have specific requirements where they only want, you know, sales within the last 90 days. We have to follow many requirements in our appraisals, and it makes our job very difficult right now, finding comparables that are within that immediate maybe neighborhood. We have to look outside in order to satisfy, you know, that 90-day sale trend that they require from us. So we need to know that we can go to other neighborhoods that are comparable, that would help support that purchase price. If we, you know, if we have something in Upper Mission, we can go outside Upper Mission and look into another comparable area that the same kind of buyer would probably likely buy in, where the values are very similar. And that happens a lot. And rural properties are very challenging right now because even less sales available to us. So sometimes we just have to go back in time. And then that's when we pick up the phone. We'll call our broker client, we'll call the lender, and we'll explain to them the reasons why we've selected the comparables we've selected, because those are the best ones available. And I'd say out of 10 files, the lender will come back and say, can you please add another comparable? And we'll say, there's no other comparable. These are the best comparables. And, you know, it's just, and it's more common in the Okanagan rather than the Fraser Valley. You know, there's a lot more sales and properties selling in the Fraser Valley, Vancouver, Alberta, especially. The market's still kind of booming over there. But the Okanagan is a very challenging market, and you really know what you're doing and have a good idea where the market's sitting and what buyers are really looking for, and if you can support that value or not.
I got a good question for you. We were in Salmon Arm yesterday looking at an acreage, and it's a 5-acre parcel. He built a brand new home on it, which is fine, but he also has a tiny home on it, which has its wheels, right, that he'll be selling with the property. And because his kids are homeschooled, he actually built another unit that has a small bathroom, 2 bedrooms on each side, and then a place for them to work. And I said to myself, well, it'd be interesting to see how this would appraise, having those outbuildings.
Yeah, and that comes down to the lender. So certain lenders like TD Scotia, their requirements are very clear. When it comes to private lending, things change quite a bit. Certain things will be allowed in the appraised value, and certain things won't. I mean, for, you know, the main institutions, a lot of times they'll max out on 5 acres or 10 acres, exclude all outbuildings, but they'll allow their garage to be included in the value. And sometimes those requirements change. So it all depends, to answer your question, it all depends on who the lender is and what they're willing to accept in the appraisal. And that's when we'll make a phone call again and find out exactly what they want included. And we can include it. We can even include a contributory value of each outbuilding if they want. We see that quite a bit. That's quite common. And then they can pick and choose what they want to maybe lend on from their end. So we kind of just listen to what they want us to do, and then we can put a value on it.
I think that's a great example of the difference between if Dallas was putting a price on that property compared to what a big bank would lend on. Your appraiser is going to come in with a different number because they aren't necessarily allowed to use all the land or all the buildings or whatever based on the lender's rules. So I think that's a great example of where people think that the numbers are all the same, but they're not. And it's really important for people to understand that, I think.
Especially in your world, Mike, because they think they have 20% down, and then they're like, okay, it's $1 million. We have 200,000. We should be good for this property. And then, you know, as an appraiser, you probably come and say, yeah, that's great, but we can't use this. You're going to have to come up with more funds.
Yeah, exactly.
We
And
have
one,
an interesting one, like, where most of the value is on the land and very little on the house. And, the client doesn't understand that way, and we have to explain it, and there's the lender involved. So it's a lot of different parts and moving pieces that they don't fully understand.
and that's what's fascinating about is having all of us on here, realtor, appraiser, lender, or broker. It's interesting how each piece has to work together to try and figure out a way to make those kind of situations work. Because in Kalinka's example, like, it's an old house and it doesn't have very much value. So, yes, it's still like a house and everybody can use it. It's just that how does the lender look at it versus how does the realtor look at it, kind of thing.
And that's another issue when it comes to the zoning, especially down in Kelowna North and South, where there's been a lot of upzoning. So as CRA appraisers, certified residential appraisers, we can only appraise a property up to 4 units. After that, it's going to be required to be done by a commercial appraiser. So a lot of these new zonings allow up to 6 units, depending where they are, how large the lot is. So sometimes we will have to turn down that assignment and refer it out to a commercial firm. So that has been an issue on our end because, like I said, we're only allowed to appraise up to 4 units. So if we get a private appraisal just from a regular homeowner, should be done by a commercial appraiser because the highest and best use of that property could maybe potentially be higher than 4 units. So we have to do those based on hypothetical appraisal, assuming that the highest and best use is maxed out at 4 units. So, but for residential lending, if they're only wanting, the current use as a hypothetical use based on the 4 units or the actual structure sitting on the property as of now, we can do those as a hypothetical because most of the time for residential lending, for most lenders, they just want the current as is use rather than taking in that future development potential. But there's a lot of that going on in Kelowna. So that has been a bit of an issue from our end for from the residential side.
Do you think that's something you're going to work with your institute to change? Because with density and all the, the rule changes, it's going to become more and more prevalent, I would think.
Yeah, we've been looking into it. But I mean, a lot of the developers are buying these sites, the MF1 zone sites that used to be the RU7 fourplex sites, and they'll just stratify out 4 townhomes. Right. So, or even if they stratify it into 6 townhomes, we can just do 6 reports for them, right? So just depends what they build. So,
yeah, I would just think down the road, as Dallas and I have talked before, like you buy an old house with a big lot and eventually you could turn that into a 6-unit rental kind of thing and live in 1 suite and rent out 5. And you guys would have a tough time appraising that. Whereas if you're, if rules change down the road, maybe you would be allowed to, but the world's changing. So we're always evolving and it's interesting how it affects everybody.
And also on the zoning side of things, when it comes to BC assessment, I'd always recommend homeowners not just to rely on that assessed value. It doesn't take into consideration, maybe the improvements that have been done to the property. But I've noticed lately, once again, down in the Kelowna South area, the properties that have been zoned UC1 up to UC 2, 3, 4, which allows various different uses, the assessed value is taken into consideration, that new zoning now, even though I came across a super small lot. It was about 5,500 square feet, but it was zoned UC1, but you couldn't do anything with the size of the lot, right? You'd have to put, at least probably 3 of these properties together to do something with it.
Right.
But the property was assessed at, I think it was close to like 1.2 million, between 1.2 and 1.5 million. But if you were to sell that lot just on its own today, I mean, you're less than 800, probably depends. So big difference on the assessed values. Unfortunately, the homeowner is probably just paying a lot of extra property tax.
For sure. That's when you got to fight that property tax.
Yeah.
And I'm seeing too, these land assemblies, they're not moving anywhere. So it's interesting to see how you guys would appraise the land assemblies that we see now when they were getting the 1.1, compared to what the actual value of the land and home is worth.
Yeah, so that would need to be done by a commercial appraisal if they wanted the full value of that land assembly. We could appraise each site individually, but we wouldn't, as residential appraisers, take on like a full land assembly. So I noticed couple years back when there were when the upzoning hadn't been done yet, the RU7 lots were being purchased up to, I think, up to 1.5 million because only certain lots were zoned for fourplexes.
Yes.
And then they came across and wiped out that, and everything was a fourplex lot. So unfortunately, the people that paid for those RU7 lots because they were a diamond in the rough are no longer that diamond in the rough anymore. And everything is a fourplex lot, basically. Even on an RU1 lot, you can go 4 units, the most standard residential zone lot in Kelowna. So unfortunately, some of the buyers back then probably got burnt a little bit on those purchases.
Okay, well, I think that's a perfect place to stop. I think this has been really fun and interesting. Obviously, we'd love to have you come back, Derek, and we can talk about a whole bunch of other things. We could go on and on, I'm sure. So
Yeah.
really appreciate you coming out. Derek's with Lawrence and Walker. We'll put the information on so you can, and your link so you can see it.
Perfect.
You can reach out to Derek if you have questions about appraisals yourself. But in the meantime, thanks, Dallas. Thanks, Kalinka. This has been great. And we hope you come back next time to watch our Home Happy podcast. Thank you.
All right. Thanks, Mike. Take care.
Thank you.